So here's how you do it. The whole thing is dependent upon making sure that you can basically do this. Find a trend on the 5-minute chart. So let's make sure these are all 5s. That would help, right? You have to find a trend on the 5-minute chart. That's the key. Okay? If you have 2 or 3 days, no wonder that was giving us so many days. I was wondering that was so strange. Okay, so you have to have basically your 2 days, 1 to 2 days on this view, so you can see the angle of the wave in the proper perspective. I was wondering why that was looking so big. Okay, now we know why. Okay, on the green and red chart, there's no need to be in market memory. The only chart that has to be in market memory is the bottom chart, the blue chart, because that is the trend chart. That's the indication of what trend we're in. Okay, this is a sideways trend on the Euro-US dollar right now. No good. Okay, the market cycle has to be trending on the 5-minute chart. Now, I don't know how many 5-minute charts we're going to have in trending mode, but if we don't have one, I can still walk you through the entry. I'm just going to see if any of them are in trending mode. Okay, dollar Canada, that might work. Okay, that might work. Okay, again, trending mode means what? 12 to 2 or 4 to 6. This is in 4 to 6, right? So we have our 13 period, 21, 34, 55. We know the difference between the two. Gang, this is not complicated. Just write it down. You can set it up later on. Okay? And basically what happens now is I found a trending chart. And this is the easiest way to find them. Just kind of scroll through the blue chart looking at which chart might have a trend. Okay? That's the easiest way to do it. So we found that the dollar Canada has a downtrend. We need a 4 to 6 or a 12 to 2. So let's go ahead and change the red candle, or red chart, to that downtrending. This is the downtrending chart. Okay, this is if the angle is 4 to 6, we go to the red. If the angle is 12 to 2, we go to the green. So what we want to do now is essentially this. Okay, the most cumbersome part is the setup. I didn't want to spend a lot of time on that because the moving averages are very simple. Okay? So what we want to do now is this. Identify a correction. Now, I realize that we could use all the tools we've been talking about. We could utilize the Fibonacci, or we could utilize the pivots, or whatever tool we're using on this same time frame. I'm certainly not denying that. But because we will cycle through market cycles so much faster, because we will hit and reach and establish chart patterns or support and resistance, horizontal levels, so much faster, it's harder to keep up with the 5-minute chart because it's in such a constant change state of flux because of the, basically what are you dealing with? How many new candles per hour, right? 12 new candles per hour? So it's constantly moving. So to be able to stay on top of it would be all-consuming. Well, I still want you to be able to look at the 15, 30, 60, 240 daily. I don't want your whole world to become 5-minute charts. That's why you'll notice day traders do nothing but day trade, because there's so much they're having to do across so many different names that it just becomes all-consuming, and sometimes they miss the forest for the trees. Okay, I don't want you to miss that stuff. I want this to be a supplement to what you're doing, not all-consuming. So that's why I have mechanized the entries. The entries are super simple. Once you find that trending market, you basically are going to, on the red chart, if it's a downtrend, short when prices reach between these two green lines. Now right now there's not a great example of this, unfortunately, because we're dealing with a market that was going into the Friday close, so everything just kind of went flat and blah. So that's why we're looking at a lot of ugly angles right now. But the mechanics are basically this. Find the trend. Once you've found the trend, go to the appropriate chart. This is for the downtrend, this is for the uptrend. And short when prices get between the greens in a downtrend, and buy when prices get between the greens in an uptrend. That's it. That's the entry. I mean, I can't imagine anything simpler than that. Here's where it will get complicated. Actually getting the entry, because sometimes you might have only a, sometimes you might have only a 3 or 4 pip difference. Now remember, in terms of which chart to focus on, it doesn't really matter for example, the green chart here could be on whatever you want. If you're scanning something else or managing something else, doesn't matter. Okay? When the chart's heading down, your focus is the red chart. So if I was looking at some other pairs, just to see if there's anything else in a downtrend, I could go through really any pair looking for a setup. For example, I've got a slight uptrend here. Let's just take a look at that for a moment. Okay, what I'd be looking to do, this is not a great 12 to 2, obviously, but what I'm looking to do is play the correction between the greens. Again, not real pretty. Let me see if I can find something that was trending to a degree that we can actually look at a decent setup on. Okay, here's the kiwi. Actually, so I just need the green. It's an uptrend back here. You see that? Moving up. So basically on this kiwi right now, I'm focused on the area between, on this green chart and on the blue chart. So the blue chart's heading up, right? I'm focused on this area between here and here because this is where the markup cycle was occurring, right? So that would basically be between here and, let's see about here. Okay, that's pretty much what that area translates into. Everybody with me so far? So I've got a markup cycle. That means I go to the green uptrending chart. And what I'm looking to do is waiting for corrections. As long as the cycle is in 12 to 2 markup, I'm waiting for price to come back to the greens. When they come back to the greens, I buy. Simple as that. This is pure day trading, gang. This is pure day trading. This is just looking for price in a trend to correct. That's it. You could be doing so many things at once, you can't be bogged down with the minutiae of a 5-minute chart. Especially when the risk-reward ratios are so small, this will end up becoming, if you did not automate this to a certain degree in terms of the moving averages being your entry, if you did not automate this, the time spent for your potential reward would just not be a good use of your time. Okay? It's different to spend 10 minutes on a daily chart knowing that you could see an upside of 60, 80, 100 pips if the risk reward is there, right? Because why do I pick out 60, 80, 100 pips? We know depending upon the pair that's not unusual per day price movement. That's fairly conservative sometimes for that daily chart. On a 5-minute chart, you might be looking at 12, maybe 15, maybe 20 pips. So it's a very short-term time frame. Why? Because each 5-minute candle might move less than 7 or 8 pips in terms of total range. It might be more, okay? But the range of each candle, and therefore the pullbacks, and therefore the follow-through, are not going to lend themselves to 60 pip moves on a regular basis. Has it happened? I've had that happen before. It is definitely not the norm. It is by far the exception to the rule. This is a very low risk, low reward entry style because of the time frame. Okay? We're not going to squeeze a 5-minute time frame to yield a day's trend. It doesn't work that way. This thing's going to cycle in and out of market cycles, in and out of markup, markdown, accumulation, distribution at a much more rapid clip. So I might get 5 or 6 opportunities like this conservatively in a morning on a single pair. Okay? So this isn't a matter of trying to hit that home run with one setup. This is a matter of chipping away at an overall trend as long as the trend is in place. Okay, let's see if I can find another time frame that had a trend up or down. Okay, the Euro US dollar did it for a little while. Okay, so let's go to the up chart on the Euro US dollar. Okay, actually we were just looking at that, weren't we? Or was that the dollar Canada? Let me just see if I can find another. Okay, here's a downtrend. Okay, here's a downtrend on the dollar yen. Okay, and again, I want to show you another setup here. So again, I'll mark out the markdown cycle. And again, the cool thing is, Monday morning, you can absolutely take a look at this setup and just kind of watch it in the background and see how it works. I mean, watch this first. Don't go crazy. Dollar yen, so here's my red chart. It wasn't a downtrend. Okay. So just so we're comparing apples and apples, there's my vertical lines right there and right there. I want them to be in line so you guys were comparing apples and apples, right? So what am I waiting on here? Okay, now that we got the spacing set up, notice the markdown cycle on the blue chart, right? Super easy. So what I want to do then